It's an algebraic equation. Off the back end is a Greek letter. It's never been like this, has it?
Absolutely. These are very unusual times, tremendous uncertainty globally. What we have seen is that monetary policy was expected to tighten already prior to the invasion of Ukraine by Russia. And then, of course, commodity prices shot up, and that has brought forward the tightening of monetary policy globally. So financial conditions have tightened, but to date, it looks like it's fairly orderly.
Tobias, you have an incredible past studying financial risk, systemic risk,
Yeah.
and you talk about the incredible volatility. We have been stress tested incredibly over the past couple of months. I think about commodities. The fact that we haven't seen more commodity houses go bust is telling. Are you getting comfort from the fact that things have not broken down on a financial system level over the past 6 months or so?
Absolutely. I do think that we saw a tremendous stress test in the realm of commodity prices and commodity trading. Of course, we have all followed in detail what happened at the London Metal Exchange, where market functioning was off. But outside of that, fairly isolated event around the nickel market, really commodity markets have functioned fairly well. And that's despite the fact that these are highly concentrated markets. There are a handful of players on the commodity trading side and on the dealer side that are really dominating the markets. We have seen margins going up and haircuts and requirements going up, but the market has been fairly resilient.
Will the market be as resilient if we see another sovereign debt crisis?
Well, that is a very, very good question. So we see many countries already in distress. These are primarily lower income and smaller countries. So for the moment, markets can absorb that shock. But of course, with the economy potentially growing lower and potentially more adverse shocks hitting, we could see a broader debt crisis. Again, to date, markets have absorbed those losses fairly well.
Which particular emerging markets are you focused on right now?
Well, we are particularly focused on smaller, so not the major emerging markets at the moment, but smaller countries, a lot in sub-Saharan Africa, in the Middle East, as well as in Latin America, Caribbean, etc. But over time, of course, there could be more wider distress as well in other countries.